Welcome to the Morning Download Podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions. Don't forget to sign up for our free newsletter at https://www.morningdownload.com/subscribe. Let's dive right in. In today's episode, we'll cover investors' expectations for Disney's earnings announcement, American credit card debt and its impact on young adults, Snap's lower than expected earnings and revenue, day trading strategies, and Charlie Munger's insight on patience in investing.
It seems like Americans are finding themselves in more debt these days. Can you believe that credit card debt has reached a whopping $13 trillion? Yep, that's right. More and more people are relying on credit to make their purchases. It's no wonder, though, considering the rising prices we're seeing all around us. With everything getting more expensive, people are forced to dip into their savings just to get by. But here's the kicker. A recent report discovered that young adults, particularly those burdened with student loans, are struggling to keep up with their payments. On top of that, auto loan delinquencies have skyrocketed and are now at a 13-year high. Ouch. And it's not just the younger generation feeling the pinch. Another report revealed that millennials and folks with lower incomes are taking a pretty hard hit. Household debt in the U.S. hit a new record during the last quarter, totaling a mind-boggling $5 trillion. Yep, that's a 2% increase in just 3 months. Now let's shift our focus to some global news. Wall Street seems to be a bit worried about a potential regional banking crisis. That's not exactly comforting, huh? On a brighter note, the U.S. Securities and Exchange Commission, SEC, is making some changes by adopting a new rule for Treasury market dealers. Looks like they're continuing their efforts to overhaul the market. Here's a fascinating tidbit. Silver is on track to have a fantastic year. Some experts believe it might even outperform gold and reach a 10-year high. So keep an eye on those silver prices. Yesterday was quite a day for Snap, the social media company. While its revenue and numbers were lower than expected, the good news is that it still had some positive results. Snap's adjusted EPS came in at 8 cents, beating the expected 6 cents. However, revenue fell short at $36 billion compared to the expected $38 billion. Snap's global daily active users reached 414 million, slightly exceeding expectations, and the average revenue per user was $3.29, just below the expected $3.33. Unfortunately, this is the 6th consecutive quarter where Snap has seen single-digit growth. What caused this struggle? Snap attributed it to the situation in the Middle East. After the disappointing news, the company's stock dropped over 30% after hours. Snap's forecast for future growth is between 11 and 15%, which is lower than its competitors. On the flip side, we have some positive earnings news. Chipotle had a fantastic quarter, with a net income of $282 million. The company saw a 4% increase in restaurant traffic, thanks in part to charging more for their burritos. However, higher ingredient prices may slightly impact this year's profits. Ford also had a strong fourth quarter, surpassing expectations for both revenue and earnings. This led to a 7% rise in the company's stock. Ford also announced a special dividend of 18 cents per share, along with its regular quarterly dividend. Other companies that reported good earnings yesterday include Eli Lilly, Spotify, and Sonos. In other news, Toyota will be investing $3 billion in Kentucky to build an all-electric 3-row SUV. J.P. Morgan Chase plans to open over 500 new branches in the next 3 years. And don't forget, stay updated because today, Disney is announcing its earnings, and major names like ESPN, Fox, and Warner Bros. Discovery have plans to launch a joint streaming service later this year. Exciting times ahead. Day trading? The thrill of it. We have to admit, it's risky business. In fact, only a mere 5% of day traders actually make any profits. But hey, we can't ignore the tempting allure, can we? So, let's dive into the world of day trading. According to Wikipedia, day trading is all about buying and selling financial instruments within the same trading day to avoid those pesky risks and price gaps. Sounds exciting, right? But hold your horses, my friend. This isn't a game for the uninformed. Here are a few things to keep in mind before you jump in. First, start with a demo account. It's like a playground where you can learn the ropes without risking real money. Pretty neat, huh? Second, stick to what you know. Don't go investing in assets you have zero knowledge about. Remember, knowledge is power. And finally, only risk what you can afford to lose. We don't want you losing your shirt now, do we? Now, if you're ready to give day trading a shot, here are a couple of strategies to consider. Keep an eye out for those market opening gaps. Smaller gaps are usually filled, while bigger ones indicate where the market is headed. So pay attention and make your move. If you're short on time, the end of day trading strategy might be for you. Stocks tend to get pretty lively before the market closes. Study the day's price action, speculate on movement, and use risk management orders to play it safe. Now let's be real. Day trading involves some luck, but it's also about studying charts and staying on top of the latest happenings. Think of it as playing a game and using your strategic skills. So go ahead, take a leap into the exciting world of day trading. Just remember to keep your wits about you and tread carefully. Good luck. Today's quote of the day comes from legendary investor Charlie Munger. Munger believes that waiting is an essential quality for any investor. He understands that many people struggle with patience and the ability to delay gratification. In the world of investing, waiting is an integral part of the process. It's not about making quick gains or seeking instant gratification. Instead, successful investors understand the value of patience and the long-term benefits it can bring. Waiting allows investors to make more informed decisions. It gives them time to research, analyze data, and understand the market trends. By practicing deferred gratification, investors can avoid impulsive decisions that may lead to financial losses. However, Munger acknowledges that not everyone possesses the natural ability to wait. For those who lack this trait, he emphasizes the importance of hard work. Overcoming the urge for instant gratification takes dedication and persistence. It requires discipline and the willingness to put in the effort to achieve long-term success. So, if you find it challenging to cultivate patience as an investor, remember that it's an essential quality to develop. Embrace the power of waiting, and through hard work and determination, you can overcome the desire for immediate results and achieve financial prosperity.
In today's episode, we discussed Disney's earnings announcement, the record high American credit card debt, Snap's disappointing earnings report, the risks and rewards of day trading, and Charlie Munger's wise advice for patient investing. Thanks for tuning into the Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at morningdownload.com/subscribe.